Hello and welcome back to Market Meridian. You've probably heard the big news, GST 2.0 is here. On September 3, 2025, the GST Council, led by Finance Minister Nirmala Sitharaman, announced the biggest overhaul of India's tax system since GST was first introduced. Confused about the new GST rates? Today we're covering the new GST classifications for goods, and I'll show you exactly which ones apply to you. By the end of this video, you'll know the difference between the old and new GST rules so you can stay compliant. To understand the new system, we first need to remember the old one. Since 2017, India has had a multi-layered GST structure. 0%, essential items like unpacked food grains. 5%, common use items like sugar, tea, packaged food. 12%, processed foods, some apparel. 18%, most goods and services like soaps, toothpaste, and capital goods. 28%, luxury items, white goods, ACs, TVs, and sin goods. Plus, a compensation cess on luxury and sin goods. Multiple slabs created confusion for businesses in classifying their products, leading to disputes and a lot of paperwork. In some cases, the tax on raw materials was higher than on the finished product. This hurt domestic manufacturers and made it cheaper to import goods, which was against the Make in India initiative. The 28% slab in particular made many common items like small cars, TVs, and cement very expensive, slowing down demand. The 56th GST Council meeting approved a radical simplification. The 12% and 28% slabs have been completely eliminated. The new structure, effective September 22, 2025, looks like this. 0%, exempt unchanged. Includes essentials like fresh vegetables, unpacked grains, and now also includes individual life and health insurance policies. 36 life-saving drugs have also been made exempt. 5%, merit rate. This is the new lower rate for most essential household and food items. 18%, standard rate. This will be the main GST rate, covering a vast majority of goods and services. 40%, demerit/sin rate. A new, higher rate for luxury items and sin goods like aerated drinks and large cars. Most products will now fall into either the 5% or 18% category. This makes the system much more transparent and easier to understand for everyone. And in a huge win for the farming community, tractors and other agricultural machinery like harvesting equipment and composting machines are also moving from 12% down to 5%. This is expected to significantly reduce input costs for farmers and boost the agricultural sector. A vast number of items are being moved to the new, more affordable 5% merit rate. Prepare to see a price drop on your monthly grocery bill. Packaged foods like biscuits, namkeen, and instant noodles will all move to the 5% slab. Many dairy products, including butter and ghee, which were previously at 12%, are also now at 5%. In another major relief, everyday personal care items like hair oil, shampoo, and soap are also moving down from 18% to just 5%. This is a significant saving for every household. Next, we have the new simplified 18% standard rate. This rate now applies to a wide range of goods and services. The biggest impact here is on consumer durables. If you are planning to buy a new television, air conditioner, or refrigerator, you can now get it for a lower price. These items have been moved down from a hefty 28% to the new 18% slab. Similarly, in the automotive sector, small cars with engines below 1200 cubic centimeters and motorcycles below 350 cubic centimeters will now be taxed at 18%, down from 28%. This is a major relief for the auto industry and for first-time car buyers. Finally, cement, a key input for the construction industry, will also see its GST reduced from 28% to 18%. And finally, we come to the new highest tax slab. To make up for the revenue loss from the tax cuts, the government is introducing a new demerit rate of 40%. This rate is aimed at discouraging the consumption of what are considered sin goods and luxury items. This 40% tax will be levied on tobacco products like cigarettes and, as well as aerated and caffeinated beverages, and on high-end luxury cars. So there you have it. A complete breakdown of the new GST rules. From September 22nd, get ready to see a major price shift. This is a move that is expected to boost consumer spending and simplify the tax system for businesses. What do you think of these changes? Will this help your household budget or your business? Let us know in the comments below. And if you found this information helpful, please hit that like button, subscribe to our channel for more financial updates, and share this video with everyone you know. Thanks for tuning in, and stay financially smart.